Forget a recession, this could be a possible depression. What is going on? Cryptocurrency is tanking, the stock market is almost reaching new lows again. Where do I think that's headed? Where are some indicators? Ethereum just had something new that happened to it. Is that good or is it going to be bad for its price valuation? And real estate keeps selling off. We're going to be diving into all of this stuff in today's video. This is going to be a very detailed video. We're going to break down some charts, break down what's happening, where I think the markets are going, and is this actually going to be a recession or is it going to be a depression? And how bad do I think it's going to get? And where do you think it's going to go after watching this video? I appreciate you stopping by Brotherhood Finance. Make sure to smash as always. Smashing is very imperative in life, so make sure you do that. Make sure to leave a comment down below. Recession, depression, 2008, 2009, or where do you think the market is headed? Furthermore, let's dive right in this video. I appreciate you stopping by. Let's get started right now, brothers. Now, first off, Bitcoin plunges 7.4%, killing hopes for inflation hedge. You know, brothers, we called this out about 5 to 8 months ago. We said the crypto market is going to have some weakness ahead, and that is really starting to show right now. Now, with that being said, the coin is now below $20,000, which is a very great threshold to keep your eye on due to people's psychological reasons of where the coin is at and where the price valuation is at. Now, before we keep talking about cryptocurrency, we're going to dive into every single sector today, so make sure you stay tuned for that. The NASDAQ Composite. So if you look right here, this shows the number of 4% plus declines by year. Now, what you're going to see right here is you're going to see 2016, 2018, 2020, and 2022. Now, something imperative to look at here is we have not had this many declines year to year since 1998 to 2001, so the dot-com bubble, and since 2008 to 2012 roughly, when we came out of the last recession we were in. Now, this is really something to keep in mind because I know I listen to so many people and they say, well, Brendan, the market is different this time. Things aren't going to change. When you continue to watch this video, you're going to see there is many similarities that most people miss, such as real estate, such as interest rates, and such as really what is happening in the economic atmosphere as far as financial institutions. Now again, make sure you take a long look at this slide. We're going to keep diving into more like this as well. But the key thing to look at is really how accurate and close some of these are. I mean, look, you got a 10% decline there, 7% decline there, and it's all lined up just like the last recessions and crashes that we've had recently. Now, inflation. What happened with inflation? Now, the Fed predicted that we were going to have the year over year at 8.1%. In reality, we had 8.3%. So inflation is continuing to increase, which is bad because interest rates will then continue to increase. And it's really creating a super bubble at this point, because what we're going to see in the next coming charts is you're going to see back in the old day, home prices would go down when interest rates went up. But what actually happened in 2008 and 2009 and in those years is we got into bubble territory. And that's when interest rates would go up. But guess what? Home prices would also go up as well. But that only happened for so many years until eventually, pop, the market crashed down. And this is very similar to what we're seeing happen today. Now, if you look right here, the variable change in GDP or gross domestic product, you can see these June projections that they're having and what's really happening. But the key thing to keep in mind is I think we've already had negative GDP, and 0.2 is very close to being a break even in gross domestic product. Now, we've done a video on this when we are in a recession a couple months ago, and it's imperative to know that typically when the gross domestic product, which measures all the goods and services in an ecosystem or an economy and how much is being bought and how much is being sold, it's a great way to measure really how an economy is doing. When that is not doing too hot, that means most likely the markets are headed downward and we are probably going to have a recession. And that happens when there is 2 consecutive quarters of negative GDP. Now, next up, what is actually priced in for the Fed raising interest rates? Now, we already know they have substantially increased interest rates a number of facets of times, but they're going to have to continue to be more hawkish than ever before. If you look right here, from September to June to February of 2024, they're not anticipating really to lay off on hikes until around November to February of 2024, which pretty much is showing that the pain is going to continue to be dragged out over time, and it's not even seeing the worst of what is to happen with interest rates. Now, this is a very hard chart to decipher. This is what I was talking about when I was talking about real estate. If you look right here, this is the 10-year Treasury and then the housing CAPE, which is pretty much just showing on average the housing price. Now, if you look at this chart right here, you're going to notice the yellow right here. This is 2021 and 2022 only. And if you look right here with the brownish orange color, this is 2003 to 2013. Why am I looking at this? This is because this is a great visual indicator, if you actually understand this chart, of why it's so similar to what happened in 08 and 09. If you look right here, all these other ones, 1995 and some of the other gray lines from 2014 to 2020, it was pretty stagnant, right? You know, normally if house prices went up, it meant interest rates were low and vice versa. But now what you're seeing on the 2021 to 2022 is as interest rates are increasing, guess what? Home prices are still on the increase, but that is starting to change, which you will see later in this video. You can actually choose certain areas like Texas, like Florida, and you can look up where have they gone over the coming months compared to their price evaluations, and you're going to see that the decline has already started, which we've also said is going to worsen in the coming months to years. But again, brothers, look at this chart. This is a great representation of what's really happening in the real estate market. I think it's going to get a lot worse. I think it's going to get a lot uglier. Interest rates are going to continue to go up. Crypto is going to continue to suffer. The stock market will probably reach new lows than we've had already this year, and things are going to start getting a little bit worse in my opinion. How far will that go? Who knows? Let's keep diving into this video right now. So, what are people saying? What are analysts saying? The expected path of interest rates is now higher than we previously assumed, which tilts the distribution of equity market outcomes below our prior forecast. Now they're saying that a 12-month forecast of 3,600 or negative 5% and 4,000. I personally believe it's going to get a lot worse. Now, let's talk about some metrics. If you look right here, I mapped out the barriers and lines that the S&P 500 needs to stay above and not really break, or it's going to show more bearish activity. Now, what you're going to see is we already broke below 3915.76, and now if we break below 3636, it's going to be a little bit more bearish. I do think we will continue to have a steady momentum downward, but if you look at these indicators here, we are already on a downward track, and I think it will get a lot worse. Now I was talking about the declines, what analysts are saying, but overall profit margins will be under scrutiny in the coming months, and equity investors have adapted to view that a hard landing scenario is honestly just inevitable at this point, and I could not agree anymore with that statement. Now, in a recession, we forecast earnings will fall and a yield gap will widen, pushing the index to a trough of 1350. And this economist says that they assigned a 35% probability of a recession next 12 months. I think they still aren't accepting the fact that, well, quite frankly, in my opinion, we've been in a recession and things are going to get a lot worse again. Now, where are the treasury yields at the moment? Right now, we're at about 4.1, which is significantly higher than we ever had before. Now, still talking about the 10-year, this is a 10-year TIPS. If you look right here in the Fed rate cycle peaks, you will see the last time the market actually bottomed or reached its bottom in 2022 was when the S&P 500 year-to-date low was 6/16/2022. Now, you know what's significant about that? That's very interesting. We are actually higher than that right now, and that means that most likely we're going to have a lower low than we have already had this year. Just based off this one metric right here, you can look at the cycle peaks, which again is just showing that the rates are going to go up even more due to inflation problems. Remember, inflation is transitory. No, that's false information. Just study history. A lot of these people are not really giving you the correct information, which is why you need to have the right financial education. If you've watched this video so far and you're finding value, please smash. It is very imperative. I cannot express it enough. Leave a comment down below. What are your opinions on some of these charts, some of this data? Furthermore, let's keep diving into this. So again, it's showing you right here on this red dot, that was when the market bottomed in 2022. The other yellow highlight right here is showing this is where we're at now. This is probably why we're going to have another low. Now, BTC, we've talked about Bitcoin at the beginning a little bit. BTC is going to continue to suffer. The reason we look at BTC, again, it's what moves the markets. It's you know, it is literally the indicator. It's what moves the cryptocurrency atmosphere in general. It's the best way to measure it. It's very finite. Again, there's 21 million. We've talked about cryptocurrency. We've talked about Bitcoin quite a few times in this channel. So if you want more information about that, where I think it's headed, make sure to check out our other videos. But again, looking at this chart though real quick, if we break below 17,596, there's going to be some more pain ahead. The fact that we already broke below the $20,000 target is already pretty bearish overall in my opinion, which is what we forecasted anyways. But it's not just Bitcoin. What happened to Ethereum? Ethereum is now $1,300, down 20% in the last 7 days, but it just had an update to its ecosystem, right? Actually, what you're going to find about that is very interesting. You're going to see here that validators have the potential to represent 64,800 to 79,200 Ether per day, and even more in some other days. Why am I bringing this up? Why does this matter, Brendan? The reason this matters is because you only need to understand a couple things about financial statements and incomes. And not only that, but being able to analyze an asset. Where do people value things? People value things off what they give it value. But there's also one other thing they value it off of. And that is something very simple in economics, and that is called supply and demand. Now, what just happened here is they are actually fluctuating more cash, or not cash, but Ethereum into the ecosystem by this update that happened to it, into the Ethereum network. So that could actually create a possible supply and demand shock by putting in more Ethereum into the ecosystem. I'm still pretty bullish on Ethereum in the short term. Definitely not in crypto, not in the stock market, not in real estate. That's my opinion. Leave me yours down below. But this could be possibly short term painful for Ethereum. Long term, I think it still could be okay, but this is something to keep in mind. The stock market will never crash, right? It will never crash. I mean, there's no way it could crash. It's doing great. That's never gonna happen, Brendan. Well, you know what's very interesting? Zillow's shuttered home flipping business lost $881 million in 2021. The real estate company says in a letter to shareholders that it is targeting revenue of $5 billion by 2025. Well, I'll pray for them, but quite frankly, this is just showing the real estate crash is already happening. Now, this is a very important piece that I took from a book. This article right here shows that we find at best weak evidence of a stock market wealth effect. However, we do find strong evidence that variations in housing market wealth have important effects upon consumption. So pretty much what it's saying is a 10% increase in housing wealth increases consumption by roughly 1.1% for the international panel, which is substantial. But while a 10% increase in stock market wealth has virtually no effect upon consumption. Now, you know, this is kind of something we've talked about many times. I tell you that real estate lags behind. People do not take this into consideration. They think that, you know, if the stock market's going to do bad, real estate's going to completely do bad, or it will never crash. They just don't have the right financial background and information. And the truth is, what is the biggest thing somebody is going to buy in their life? And that all goes back to pretty much what the rat race is. It is a home. A home is pretty much the biggest valuable asset, or at least asset people would claim. Robert Kiyosaki claims an asset as taking money and not taking it out of your pocket, but putting money in your pocket. But nevertheless, a home is the biggest purchase somebody will have. Now, if home prices continue to slide, which by the way, they already are, based on the statistics that we're looking at and more to come, that means it's going to affect consumption. But if consumption gets hit, that means people will be buying less goods and services. If people are buying less goods and services, that means gross domestic product falls. But if gross domestic product's already falling, and the GDP's falling, and home prices are still increasing while interest rates are rising, we have a big storm ahead of us, brothers. Things are gonna get a lot worse. Let's keep diving into this. Now, if you look right here, home construction fueled by multi-family projects is a little bit lower, but it's still elevated, right? But what's very fascinating about that is if you look, builder sentiment continues to fall. Slides for a 9-month decline ever for the lowest in 9 months. Now, you know what's very fascinating? If you look at this, you can't see it, but the last time it fell this rapid was in 2008, 2009. That is something important to keep in mind. Now, where are housing prices actually going? Well, let's look at Austin, Texas, for example. If you look right here, the start date of 4/4/2022 to 6/26/2022, the average home roughly, or the median sale price in Austin, Texas, was $554,000. Now, what's quite fascinating is if you look at today, or around today's time, from 8/8 to 9/4, it's only $498,000. So we're already starting to see the price decreases starting to occur. This is a great way to look at it. This is just off redfin.com. This is my presentation. This is my video for you today, guys. If you found value in it, please make sure to smash. Again, I won't say it again. Just make sure to like, make sure to leave a comment. Please subscribe to our YouTube channel if you're not part of the Brotherhood. If this is your first time stumbling across our channel, we are on Instagram, TikTok. We have our own website at brotherhoodfinance.com. If you want to cop yourself some merch, you want to learn more about investing, more about real estate, more about crypto, really just get started on your financial journey and learn how to prosper from this, make sure to check us out on all our social medias and on our website. If you stuck around this long, I really appreciate it. I hope you have a great rest of your day, a great rest of your weekend. Much love as always. Brennan is out. Peace.